Welcome to Forkast IQ, where we've curated the top stories the past week with insights and updates as the world accelerates into the digital economy. And it is great to have you on this ride with us. I'm Forkast Editor-in-Chief Angie Lau. So one thing that has become apparent to me is that when it comes to innovation, you have to be aware of the cycles. What goes up must come down, but just because it's down, you can't count them out. And Web3 is no exception to this rule. It is a perfect way to describe what we are watching closely in Hong Kong, and another big move that this special administrative region of China, just a few short years since crypto exchange platforms actually left under duress, banning crypto trading for retail customers. That was no good for business if you were a crypto exchange. But this week, from Hong Kong, we're seeing a full 180. On Tuesday, the Securities and Futures Commission, or SFC, announced it will allow licensed crypto trading platforms to offer services to retail customers. Retail investors, welcome back. But platforms must be licensed under new rules where virtual asset trading platforms must apply for a license to operate in the city. The SFC will begin accepting applications starting June 1st. And you know what? It is all part of a bigger strategy here. It really looks like to claim the title of global crypto hub, even as regulators elsewhere remain tepid and hesitant. And more on that later on in the show. But in Hong Kong last week, the city also announced the pilot run of its very own central bank-backed digital currency, or CBDC, called the e-HKD. We sent Forkast Jenny Ortiz out to take a deep dive into e-HKD's multiple potential use cases in payments and tokenized deposits.
On May 18th, the Hong Kong Monetary Authority, or HKMA, announced the launch of an e-HKD pilot program where a number of major names from the financial, payment, and tech industries will participate in the project as operational partners. These include State-owned Bank of China, China Construction Bank, Industrial and Commercial Bank of China, and international banks HSBC and Standard Chartered Bank. Ant Group's Alipay, one of China's major payment apps, will also test the e-HKD's programmable payment use cases through its Hong Kong unit. Other participants include Ripple Labs, Visa, and MasterCard. The pilot program will explore e-HKD use cases in 6 categories, namely full-fledged payments, programmable payments, offline payments, tokenized deposits, settlement of Web3 transactions, and settlement of tokenized assets.
In terms of the impact of this initiative, it has the potential of future-proofing Hong Kong from developments, technological developments.
The HKMA is also looking into the possibility of linking e-HKD to China's ECNY. Stanley Chow of All In Consulting told Forkast the linkage could be a game changer. He said such a seamless process without any banks or commissions involved will create millions more cross-border transactions to the point that it could boost Hong Kong's economy. The HKMA has also been working on a cross-border CBDC project called mBridge in collaboration with the Bank of International Settlements and central banks of Thailand, China, and the United Arab Emirates. Last year, the mBridge project had successfully executed real-value cross-border transactions involving 4 currencies and 20 commercial bank participants across 4 jurisdictions. Meanwhile, a CBDC tracker published by US-based think tank Atlantic Council showed that 18 of the group of 20 or G20 countries are in the advanced stage of CBDC development, and 7 of those are already at the stage of conducting their own pilot programs, but Hong Kong's moves could nudge others that are still standing behind the starting line.
Now that Hong Kong is already experimenting conducting a pilot testing of retail CBDC, it could compel other countries, other central banks, neighboring central banks, to finally consider conducting similar pilots for their CBDCs, especially at a retail scale.
Jenny Ortiz, Forkast.
From Hong Kong's own digital currency all the way to the U.S. debt ceiling, there's just so much to talk about in the digital economy this week. Some macro headwinds for some, others seeing it as a tailwind when it comes to opportunity. Always good to welcome back James Quinn, managing partner of Hong Kong-based crypto investing platform Q9 Capital, to discuss it all with us. James, it's really good to have you with us today. All right, Hong Kong is marching full steam ahead on digital assets. Tell us more about what the city's own CBDC actually means for its position as a crypto hub.
I think any CBDC, not Hong Kong specific, has a lot of potential benefits. Obviously, there's a potential greater connection to what's happening in digital assets overall. That means more wallets, more infrastructure for wallets, more things settled on chain. If, like most people in the space, you believe that from a technological perspective, most things will be settled on chain, that's how payments will happen, that's how value will be transferred, a central bank digital currency could fit into that regime, obviously, pretty nicely. Now, it doesn't mean that there aren't potential issues. For example, take back currency that's been given to somebody or that somebody has or immediately locked up, right? The way that you don't have control over the currency in its current form. It wouldn't allow people to be anonymous or even potentially even pseudonymous with any central bank digital currencies. So Hong Kong would and potentially have those same issues that it would have to deal with. For Hong Kong specifically, I think it could be an excellent opportunity, especially if it becomes more and more integrated with, again, a financial services layer which is settled on chain, if that becomes the way.
Right. Now, the Hong Kong dollar is pegged to the USD, James, and once the e-HKD becomes a reality, we do have a central bank digital currency here, which actually is a US dollar proxy. What does this mean for US and global dynamics, and how do you think it could impact the demand that the Hong Kong dollar would have in the marketplace as a gateway to the digital US dollar?
I don't think it actually changes things dramatically as relates to, the dollar is much bigger than the Hong Kong dollar. Now, if dollar remains as it is, the preferred currency of choice, it's certainly the mark of choice, the way that people like to denominate their businesses on a global basis, then I think if it can continue, Hong Kong's always served that route to some extent, being pegged to the USD for a very long time. And I think it will continue to grow in that way. Maybe it will just take a larger and larger share of what's happening in digital assets and crypto, though, because it's both having a financial regime which is generally well regarded, a regulatory regime which is generally well regarded, and also being pegged to the dollar at the same time.
All right, shifting gears then. Let's talk markets. Bitcoin, the largest digital currency out there, seems to be caught in a trading range of late. Do you see signs it's going to be able to bounce back to its month-long highs of 29,000?
Basically, the market hasn't really, moved that much in the last month. So it's more of a kind of a large drift, if you will. Bitcoin did, since the beginning of the year, what it was supposed to do. Tech rally. Tech is leading a rally in the equity market, especially in the U.S. Bitcoin followed that. It tends to move with tech. Then you had the banking issues come out over the end of the first quarter and into now. We saw a rally in Bitcoin, a rally in gold, and that was also what it was supposed to do. So it performed as e-gold. You have seen a breakdown in the correlation between Bitcoin and ETH in the last month or so, which is probably good. That shows that investors are actually looking at what these assets are, and there's not just a crypto narrative. I think that it reflects institutionalization and the continued flow into the space.
All right, James, before we let you go, I got to talk to you about U.S. debt ceiling talks that's just dominating the market right now. And one piece that stands out for us in the digital asset space is President Biden's comments about not agreeing to a deal that might allegedly benefit crypto traders. It's very interesting language. This is a two-parter for you, James. One, how are you viewing these macro factors influencing momentum for digital assets? And two, is this posturing from Biden? What do you think it's going to mean for crypto in the U.S. and globally?
I think crypto, digital assets, anything tokenized, but in particular crypto, because that's where it all started in terms of digital assets. they're becoming an asset class like any other asset class. They're closer and closer to the general financial system, so they're going to be affected by the debt crisis. I mean, where the money's coming from now is not just totally crypto money. The folks that are investing in this space right now are also putting their money elsewhere. So you're going to see it move along with the rest of the debt ceiling. Now, there's been specific news where Biden mentioned he doesn't want a debt deal that protects crypto traders. That is specifically related to closing of the wash sale rule. Right now, crypto traders can sell an asset that's at a loss and buy it back right away and take that loss for the current tax year. If they close that loophole, if you will, not every asset actually is under the wash sale rule, only equities and certain other assets, but if it becomes like equities in that way, then crypto traders will have a little bit less benefit in terms of tax.
Always good insights there, James. Truly appreciate it, and thanks for your time today. I know that our audience appreciates it too. All right, let's also quickly check in on what crypto markets were up to this week. We have Forkast Megachada, who's making the big look into the big move. So who's doing what, Mega?
Angie, crypto OG Bitcoin was the one shaking the crypto world this week. It traded range bound for the most part around the $27,000 level. But come Thursday morning Asia, Bitcoin had dropped over 3% in a matter of 24 hours and looked rather close to breaking the $26,000 level on the lower side. Now, worries about US debt ceiling and ratings agency Fitch putting United States AAA credit rating on negative watch are playing havoc with investor sentiment. Ether, on the other hand, looked far more resilient, having dropped only 1.8% for the week and was trading just under $1,800 by Thursday morning Hong Kong. Meanwhile, Dogecoin was the other big loser among the top 10 cryptos for the week, falling 6% after Elon Musk warned investors against putting all their money into the meme coin.
All right, thanks for that, Mega. Time for a quick break right now, but we are going to check in on the NFT markets when we come back. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, thanks for staying with us. You are watching Forkast IQ, and you got NFTs, you got an NFT in your wallet? Well, NFT markets had a pretty brutal start to the month of May, what with meme coin frenzy and sky-high gas fees. But things, well, they're slowly picking up. Mega joins us once again to tell us the trends that she spotted on Forkast Labs' NFT indexes. Mega?
Angie, NFT volumes have slowly picked up this week, averaging about $28 million in daily sales. It's Ethereum NFTs that are seeing a lot of interest, which can be seen by the strong up move on the Forkast Ethereum Composite, which jumped a solid 2% for the week. But money rotated out of Solana and Polygon NFTs this week. Forecast indexes for each of these chains saw a cut of at least 2.5% apiece. Meanwhile, demand for Bitcoin ordinals has cooled off this week compared to early part of May, but they are firmly entrenched in the second place on NFT sales volumes.
All right, thank you so much for that. Despite the macro gloom coming out of the US, we are seeing green shoots abound. Last weekend, thousands of NFT enthusiasts, celebrities, entrepreneurs all descended upon the Midwest in the US, Indianapolis, for VCon. This is a 4-day conference that brought together the who's who of the Web3 community. And we bring in our very own Yehuda Pesher, who was also there to talk about all the action at VCon and so much more. Yehuda, it was a really cool event that we saw at VCon. Really interesting to experience. An audience of everyday Americans get major exposure to NFTs in a mainstream way, and meeting up with the NFT community that Gary Vaynerchuk, the V in VCon, this, a lot of you may already know him, digital marketer, social media celebrity, that he has really embraced. And so he's putting these two communities together. What were your key things that you picked up on? It was really cool to see.
So what I felt was a maturing space here, and it was VCon was the professionals of the space, really networking and talking and sharing again their expertise with anybody who was willing to listen. And there were a lot of people willing to listen. It was a large audience. It was a large crowd, thousands. I want to say up to 10,000 people or so probably attended, and you felt that all around you. Great energy. It was a great conference. What I thought was maybe the most interesting thing is I didn't hear the term NFTs often. I mean, I could probably count on one hand how many times I heard the term NFT. Instead, it was a lot of talk about business and building businesses and the skills that it requires and how to network.
Yeah, interesting twist on ticket sales too, right? VCon 2023 tickets were NFTs that could be purchased on OpenSea, and then they were being traded in the secondary market. People were just vying for those tickets. And we know that NFTs giving access to events is one of the hottest use cases out there. But what was the experience at VCon like? How did you see people adopting to this new idea of using NFTs as tickets, especially if you're a mainstream customer?
So to me, the ticket to get into VCon, it's icing on the cake. And that is something that I think a lot of NFT projects are looking to do, right? You have the NFT, which is a collectible. It may have, art from an established artist. On top of that, they want to try building like IRL communities, in real life communities with it. And so your NFT then will get you into their activations, their parties. Maybe it's a dinner party. I hung out with a team called the CyberKongs, and you owning a CyberKong got you into a rather upscale dinner party, but you had to own that CyberKong to get into that.
All right, from VCon to other news making headlines in the NFT world, Yehuda, we have bankrupt crypto hedge fund Three Arrows recently auctioned its NFT collection at Sotheby's and raised a whopping $2.5 million. Quite the haul there.
That auction that was at Sotheby's blew people's expectations away, right? So we had all of these, highly regarded NFTs that were being sold here, and some prices, some of them were expected to sell for maybe $100,000, maybe up to $150,000. And I'm thinking of a piece called a Fidenza in particular, ended up selling for over $1 million. And it just shows how much people really do value art in this space.
Yehuda, thanks as always. Really appreciate you. All right, let's take a quick break right now. Allegations against the biggest crypto name you know that could have huge repercussions to the world of crypto. That when we come back. And where in Southeast Asia are exchanges getting some regulatory clapback? Got to stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forkast has it covered. This is Forkast.News.
All right, welcome back to Forkast IQ. Binance is yet again in the crosshairs. Some pretty hefty allegations were made against the world's largest crypto exchange this week. What happened? Okay. Here we go. Reuters reported on Tuesday that Binance allegedly commingled billions of dollars of client funds with its own revenues in 2020 and 2021, obviously contrary to U.S. regulations. These allegations were sourced from three unnamed company insiders, and they were said to be the source of what happened here, where customer funds were merged with Binance's own money almost daily, apparently, allegedly, at Binance's accounts held at the now defunct Silvergate Bank. So that's what's out there. Binance's chief communication officer, Patrick Hillman, denied the allegations. Obviously, these are very poor optics, especially post FTX. And so we're seeing some back and forth here, and you can guarantee that this story is not over. But interesting to note, Reuters did say that there was no evidence that client money was lost or taken. So, silver lining. In other news, a series of crackdown on crypto exchanges in Southeast Asia to tell you about. On Monday, Malaysia's Securities Commission asked crypto exchange Huobi Global to stop its operations in the country. The regulator also pulled up the exchange and its CEO Leon Lee for operating a digital asset exchange without registration. Malaysians are also urged to immediately cease trading, withdraw all their investments, close accounts on the platform. Huobi, meanwhile, has been told by authorities to stop communicating with Malaysian investors and withdraw its app from app stores entirely. Over in the Philippines, the country's regulator warned Filipinos not to use New York-based crypto exchange Gemini. In its advisory last week, the Philippine Securities and Exchange Commission said that Gemini operates without the necessary license to take investments from the public and does not have the authority to issue securities in the country. Now, in a statement sent to Forkast, Commissioner Kelvin Lee said that, quote, "This is part of the Commission's efforts to secure the investment landscape. We do not want unregistered and unlicensed entities to operate in the Philippines." End quote. Now, Gemini has not responded to Forkast requests for comment as of this recording. You can be sure there's more to come. All right, now over to Japan. We're going to take you there from Southeast Asia all the way to Japan, the land of the rising sun, where I wonder if we could be seeing a period of crypto renaissance. We are seeing increasing government support for Web3, but can lawmakers iron out the creases in its Web3 policies that have seen some of the nation's best young talent actually leave for more crypto-friendly climes like Dubai and Singapore? Well, we sent our Tokyo-based Forkast.News editor, Will Fee, to find out.
Just like the cherry blossom that arrives each year, Japan's crypto spring is in full bloom. And, as it turns out, crypto winter in the land of the rising sun was never really that cold. That was the message to emerge from 2 weeks of Web3 related events in the Japanese capital Tokyo. First, a blockchain expo at the Next Tech Week Spring Trade Show from May 10th to 12th, and then the Team Z Web3 Summit the following week. The country's Web3 and blockchain czar, Masaaki Taira, who spoke at both the recent conferences, says Japan's exchanges can be considered the safest in the world, a point of pride for a nation that had, it was feared, wasted its comparative advantage as an early crypto adopter. Now, the government of Prime Minister Fumio Kishida is working on ways to lower the tax and regulatory hurdles that have, so far, proved something of a barrier for greater Web3 adoption. And the world is on notice to see just where this growing sense of optimism and momentum can take Japan.
I think just the regulation needs to be kept to a minimum. I think over-regulation is what kills a lot of the industry and lets the young, bright people go to other parts of the world. So I think low barrier to entry and the ability to innovate is absolutely key.
The government has also been vocal in expressing its support for what it calls digital transformation, or the use of cutting-edge technologies like non-fungible tokens, or NFTs, and decentralized autonomous organizations, or DAOs, for use in economic revitalization projects in regions suffering the effects of an aging society and depopulation. Over in the private sector, meanwhile, the nation's biggest gaming companies are now paying attention to the potential of on-chain games.
There's quite a lot of interest in gaming in Japan, as well as game companies moving into Web3 space. And the Japanese government is actually really strongly promoting these use cases, saying that Japan wants to be a leader in Web3 in the future. And a lot of Japanese companies are taking this as a sign to move into gaming or gamification, such as commemorative NFTs or these other kinds of use cases that are, gamification-like.
But will the issues that face Japanese society today, namely an aging society and diminishing labour pool of young skilled workers, also affect the Web3 space of tomorrow?
でやっぱ日本の方々っていうのはね、この間、電通さんも Web3 に関してアンケートを取られてて、やっぱ Web3 よく分かってるっていうのが、日本の国民の中の1割程度。でかつやっぱり Z 世代って言われてるところが Web2 に詳しくってやっぱ上に行けば行くほどリテラシーが低くなってしまう。でも人口密度でいうとやっぱ40、50、60代の方が人口密度が高いんでクリプトをもうめっちゃ推進していきます、ブロックチェーン推進していきますってなるとリテラシーどうしても戻られてしまうっていうここの天秤のバランスがすごく難しいかなと思います。ただそのドバイとかシンガポールぐらいの才能の集まり方 を日本も同じようにするっていうとなると、もうちょっとこの柔らかく、もっと自由に、事業が進められるような枠組みがないと、ちょっと今はすぐに厳しいんじゃないのかなっていうふうにはちょっと前から思ってました。
With the consensus being that the limits of Japan's Web3 development are largely defined by the nation's ability to effectively tweak its tax and regulatory frameworks for increased innovation, the ball is very much in the government's court. In Tokyo, Japan, I'm Will Fee.
Great insights there, and I dare say the only kind of insights that you're going to get right here on Forkast News. And that's a promise every week. It is a wrap for us this week. Truly appreciate you for joining us. Remember to like and subscribe. It's super important. Obviously, if you like this content, it allows us to deliver more of it on a weekly basis. You'll remember one day it all started here, the digital economy, and diving into the future. And if you are watching on this channel from the comforts of your very own home, it is easy to stay connected with Forkast for the latest developments in the world of crypto and Web3. All you got to do is, you know where to find us, Forkast.News. That's where you find us. I'm Forkast Editor-in-Chief and your host, Angie Lau. A pleasure to have you as usual. I'm so glad you joined us here. Forkast IQ. Get intelligent in Web3.